Good evening, and welcome to the AJP Northeast Asia Market Close. Artificial intelligence spending doubts, higher oil and forced risk reduction hit the region together, but Korea's concentrated chip market absorbed the heaviest blow. One repricing drove all three markets. Alphabet's larger than expected artificial intelligence infrastructure spending revived the question investors had postponed during the rally. How quickly will enormous data center investment turn into earnings? At the same time, renewed United States-Iran tensions pushed oil higher, raising inflation and interest rate risks for Asia's energy importers. But the damage was uneven. Korea fell nearly 6% because Samsung Electronics and SK Hynix dominate both the index and the region's most leveraged AI trade. Japan lost around 3% as heavyweight chip testing and technology investment names followed the Nasdaq lower. Shanghai fell only around 1%, though its optical network leaders also retreated. This was not a rejection of AI demand. It was a repricing of what investors should pay for that demand and how much leverage they can carry while waiting for returns. The KOSPI closed down nearly 6% at around 6,690, breaking below 7,000 and triggering a sell-side sidecar. The mechanism was concentration amplified by leverage. Regulators moved today to accelerate stricter cash requirements for single-stock leverage products tied to names including Samsung Electronics and SK Hynix, acknowledging that derivatives have magnified benchmark swings. Samsung Electronics fell nearly 8% to around 249,500 won, about $170. SK Hynix dropped more than 8% to around 1,759,000 won, about $1,200, making the purest Korean high-bandwidth memory exposure the largest pressure point. Samsung Electro-Mechanics also lost more than 8% to around 1,330,000 won, about $907. That third move matters, selling spread beyond memory producers into the component supply chain, showing that investors were reducing exposure to the entire AI hardware complex. Shanghai declined less, but did not escape the same reassessment. The Shanghai composite fell around 1% to roughly 3,826. Zhongji Innolight, a major supplier of optical links for global AI data centers, fell nearly 2% to around 1,055 yuan. Eoptolink, another optical module maker, lost around 3% to roughly 482 yuan. Their declines were modest beside Korea's memory rout, but the direction was identical. Investors cut exposure to companies dependent on hyperscale data center spending, continuing at exceptional speed. CNOOC fell about 2.5% to around 32 yuan, even as crude remained elevated. That was China's sharpest detail. Higher oil should normally support an upstream producer, but broad de-risking and profit-taking outweighed the commodity tailwind. Shanghai held up better because it is less dominated by a handful of global AI bellwethers, making the benchmark less sensitive to the same concentrated unwind. Japan sat between Korea and China. The Nikkei 225 closed down around 3%, at roughly 64,449, as the United States technology sell-off passed directly into the index's largest AI proxies. Advantest dropped nearly 6% to around 28,945 yen. As a leading supplier of chip testing equipment, it is one of Tokyo's clearest measures of expected semiconductor capital spending. SoftBank Group fell more than 7% to around 5,480 yen, reflecting its sensitivity to global technology valuations and its heavy influence on the price-weighted Nikkei. Fast retailing declined less than 1% to around 76,530 yen, providing the contrast. The index's non-technology heavyweight weakened, but did not collapse. The yen offered little protection, while Japanese inflation accelerated in June, reinforcing expectations that the Bank of Japan may keep tightening. Tokyo therefore faced both sides of the shock, weaker AI valuations and a higher imported energy bill. So this was one sell-off with three levels of exposure. Korea showed what happens when AI concentration meets leverage positioning. Japan showed how a small group of price-weighted technology names can pull down the market. China showed that lower concentration cushions the index, but does not insulate companies tied directly to global data center spending. The open question is whether investors are merely reducing leverage before the next earnings cycle or beginning a deeper reassessment of the returns promised by the AI capital spending boom. We will be back for the next session to see whether chip shares stabilize, whether oil extends its rise, and whether buyers return after the weekend. For daily Northeast Asia market coverage, please subscribe. Thank you for watching AJP.